Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, February 25th. Obviously, big move down in the markets today, and kind of, thought we might get out of February without any major, volatility other than some shorter term pullbacks and so forth. But this seasonality does seem to show up. Remember, we've kind of talked about that a few times. I haven't really stressed it that much, but yeah, typically the February in the in the year of an election is normally pretty weak, right? And so now it is living up to, um, you know, basically history right now. So let's go through the numbers and we'll talk about a few different concepts here. Kind of try to make a little bit of sense of today and hopefully give you a little bit of guidance or not guidance, but kind of what I'm looking for and what I think some of the reasons are this and maybe some misconceptions out there too. So risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice, recommendations, or anything like that. I thought that this was a pretty good tweet too. I'll kind of cover this first because I think he just sent this out. Dennis Dick, he runs he's one of the moderators on Benzinga's pre-morning prep show. And what he said is, got to think any tech stock that has significant a significant rally on earnings will be a fade. Money managers will be looking to reduce risk on strength. Just my opinion. So what does he refer? So he's making a couple good points there. And I think if you look at what happened in Nvidia last night, really good earnings. But the question is, so why did this happen? Where normally when you see a company come out with pretty decent guidance, right? Remember, again, a lot of these earnings reports, it's about not so much what they did last quarter, but what management, what their views are on the future. So why is this not mattering? Sorry, why is this not mattering right now, right? So because there are institutions that are basically using any pops to sell right now. And there's a couple other names that reported after the close today and looked like pretty good quarters too, right? So Etsy, I think, had really good numbers. Now they are up, so they did go through the opening print. For a while they were just kind of hanging down here, but Etsy's numbers were great. Right, so we can bring up their numbers. So let's see if it lives up to. I mean, it's kind of what we want to see, right? Is we want to see a name that had blowout numbers, right? They've revenue 617 versus 515, and a few other things. They beat on earnings. $1.08 versus 25 cents. That's huge. So they should be doing this, right? This should be the appropriate reaction to these types of, numbers that they just put up. So that's a good sign. Salesforce is always a little bit tricky, but they had really good numbers too in their guidance. So let's see if they're catching a bid here after. No, so they're not. This one is not going up. So and I don't know. There may be something in there. I haven't had a chance to read through these, but yeah, look at Salesforce on a day where it's down 4%, getting crushed all the way down to 222. So. Oh, I forgot about this name reporting. Fitch. I was actually going to play this name to the long side, so I'm glad I didn't. But let's see, what did Fitch do? You just have to laugh a little bit about today, and we'll get into the nitty gritty of today. By the way, we have a member webinar today. We have a couple all-star members that are going to be talking about their game plan, which they're probably going to look a little bit like this today. After today. This is a movie from the 80s, one of my favorites from the 80s, Spies Like Us. So that might be the look on their face today, but but we'll get through it. So what did they do here? Lost 653 versus 34 cents. 8 versus, so I don't know, maybe this is a dip to buy. I'm not sure yet. I have to read through a little bit more, but they're down. They're down here a little bit. All right, so let's go through, as I usually do in these videos. We'll talk about the index performance. Ugly, right? SPY finished down 2.4%, Qs down 3.5%. Diamonds fared a little bit better. Small caps really got hit. These should all be in red, by the way. Sorry, I'm a little bit lazy right now. Maybe not that dark red, but All right. So, and then if we kind of go over so this is kind of, I think, where there's a lot of attention right now. So we'll put this like in gray or something, is on bonds. So why is this such a big issue with bonds, with bonds going down, yields going up? Well, because there's these things called like the discounted cash flow, where, how a lot of analysts, fundamental managers, how they basically are valuing a company. When you increase the denominator, then what happens is the company, the whole ratio gets more expensive, right? A company becomes more expensive as interest rates climb, is the short end of it. So that's the deal. And if so, I'm going to talk a minute or two about bonds here, because I think it's important. They were all over the place today. So there was a bond auction too, but we don't normally see this, right? Look at the move today, 1.6%. Right? And we don't normally see bonds move in this type of velocity. So it just tells you something's kind of, going on here, right? Look at the volume, by the way, in TLT. Now, we talked about this yesterday too. We talked about the long bond futures in ZB, right? And I talked about how that there was one of these virgin point of controls, right, which is part of our MarketWebs indicator, right? And if we look at the ZB, right, there is another VPOC down here is the issue, right? So we took this thing out. What is the RSI, which I talked about yesterday? It's pretty damn oversold. So I don't know if this other VPOC needs to be taken out, because there's more behind it. Let's move back to TLT. TLT and that bond future are different durations, right? TLT is plus 20-year duration, so there's a mix of bonds in their portfolio, and the 30-year bond is a 30-year contract that is tracking, right? So yes, we did go ahead and take out this virgin point of control down here, and this was something that I was hoping that we wouldn't get down to, but we did get down to it. And big volume. Usually, so again, there's never 100% in trading, and in markets. But usually big volume like this after a big move down and really being oversold, the RSI is a 17. It's ripe for a bounce. I could tell you, I am long. I did get long TLT today, right? So I put my money where my mouth is, right? I've been saying that I would get basically long if that happened, and here's how I basically played it, right? I was doing this right around that big auction, right? And I was in short-term calls, right? Not this week, but next week calls. And I took profits in these and I rolled them to the March. So again, I'm still in short-term, a very short-term trade, but at least it's a little bit longer than a week out, right? So we'll see how that materializes. So yes, I'm very much playing for a bounce at this point in bonds. Now, and it's kind of doubling up on a trade, right? Because I'm more of having longs in my portfolio, equity longs. So I do think if bonds rally, that will provide some relief to equities, and they should bounce too. Now, there's a lot of moving parts here, right? So I think what is kind of transpired, it is tough to, once the ball is rolling a bit, when funds are liquidating some of their holdings, especially more on the growth side. Once that ball gets rolling, it's tough to say that they're going to jump right back in. You might see that little bit of a relief rally, but it's going to be tough to change those asset managers' minds completely, right? Even if yields back up a little bit, right, and bonds bounce, right? So we'll have to see how that goes. Qs, right, and there was this virgin point of control that was left behind, which we went over, which I don't think we took this out, unfortunately. If we go over to the 1 hour chart, right, you can see we got close. Hopefully this gets taken out in the overnight market. Right, this should be one here. And you could probably see that in the Qs. But for now, we are holding this S2 Venom. I always get the questions on Twitter, what are you talking about, S1? What are these Venoms? They're extensions away from this thing, right, which is the value area for the month, or sorry, for the week, right? So they're extensions away from there. And there's our own secret sauce, so I can't define what our secret sauce is, but they are extensions away from this week's value area. Again, what is the value area? It's based on price, volume, and time from the last period. So this is this period from last week, right? But that's kind of what we have. Maybe you can see it on the Qs. Let's see if I have the right time frame. Yeah, the Qs you could see. So it's from here, right? So that's, again, the virgin point of controls, they're significant, right? It's an area of high volume that has not been touched, right? So we often see those act as magnets, just as I explained in the TLT, and I've done this in previous videos. So you should, if you're a regular viewer of these videos, you should know that I talk about virgin point of controls, value areas, right? Which again is based on a little bit of the market profile, right? So you could switch the market profile on and show profile, right? So this you could find on any application, right? The market profile, right? So this version point of control, right, is based on this market profile, right? And same thing with TLT. Go back and look at TLT. I don't know if I'm going to be able to figure out when that was. Oh, I got to go back to the 1 hour. Sorry, the daily chart, right? So that's all the way back from here, right? That's this volume profile. So yes, believe it or not, these things become significant. So that's what I'm looking for tomorrow, is to see bonds actually possibly green for the day, or maybe sliding a little bit more. Not sliding, but into next week to see bonds actually rally a little bit, right? A relief bounce. Okay. So what else is kind of going on here? Well, we talked about growth. If you look at some of the areas that are getting beaten up, there is that going on, and why this is very bumpy when growth areas sell off is because there's such a big portion of the indices, right? Again, we talked about that earlier in the week. If you go and you look at the S&P components, right? So if I want to bring up the S&P components, this screen will basically give this to you to show you that tech is 27. Tech is mostly growth. Consumer discretionary is mostly growth. Communications are mostly growth. That's Facebook and Google, which is a big portion of that. When you add up this, right, you're looking at over 50%, or excuse me, just a little bit over 50% of the S&P, just in those three sectors, is heavy growth, right? And we're not even talking about biotech or anything like that either. But so it's a very big portion, just those three groups. So that's why it gets very bumpy. Now, another chart that I had talked about too was value versus growth. Now, look at what this is doing. They were both down today, but remember when you look at ratio charts, right? It's not so much one. The relationship isn't always one is up, one is down. Right. So, for example, if you look at IWF, right, which is the Russell, so large cap growth was down 3% today, and large cap value was only down a little bit less than 2%. Right. So, on a relative basis, that's why you are seeing, value climb here. And again, if I showed this chart with IWM and Qs as well, but we're basically, the retracement is on. Where we retrace this back to, we don't know yet. Where would be a reversion to the mean, right? At least, you could see how far down this thing got in trend, but at least in here. So I tend to think that value could go a lot further versus growth in the short term, and I'll stick to what the technicals are telling me, right? And to me, when you see things like the 50-day crossing over the 100. The 50-day hasn't crossed above the 200 yet, but you can kind of see it's materializing, right? So, how do we so let me talk about one other thing first too, and then that'll be it for the video, because we have a webinar starting in about 20 minutes. Now, I'm getting a lot of questions and people observing, what transpired last February. Right, and people are saying, "Oh, geez, last February, we had this happen." Well, I really wouldn't go that far. There's things along the way. even here, we decisively broke the 50-day moving average, which is this line that I've got highlighted here, right? And first of all, we had a completely different set of circumstances. So it's really difficult. You're really reaching, I think, if you're going to try to compare a sell-off that happened last year because of a global lockdown and a big move down in economic activity, huge move down globally. So to try to compare like a little bit of a sell-off to this, I don't think you're comparing apples to apples. Or, I think you're comparing apples to oranges. So yes, I understand today is a vicious sell-off. It's a big move down, but you don't really have a break in any of the technicals. So I know it's every sell-off like this. When you have a big down day, they're all ugly. They all feel nasty. But you have to keep things in perspective, right? That's a word that I use a lot. Perspective. This is not broken the 50-day moving average. So you really can't do this analysis and say, oh my God, it's going to happen again, when we're still above the 50-day moving average. So let's play this out for a minute, and I will tell you what I will do. And this happened to me a couple weeks ago too. I reduced a bunch of my exposure funny again that this is happening at the end of the month, right? I just talked about this in yesterday's video, how the end of the months have been horrific. But listen, on Friday, back on January 29th, I listened to my rules, and I was basically in about 85% cash on that break of the 15-day moving average. What do you think I'm going to do again, right? And by the way, I recovered quite nicely and had I'm still up nicely for the month of February. Even today was kind of a dinger. But if we continue to move south and break the 50-day moving average and start the month of March below value, I will be defensive, right? And in my trading account, right, I will be taking off a lot of exposure. I mean, I took off a lot of residual trades today. Here, you could look at what I did today. It's not pleasant. I tried trading a lot more Q. I made some money in Qs today. I made a little bit of money in SPY. When the market's moving like this, I shift to index trading rather than single stock trading. When the VIX gets back above 25, stocks tend to move a lot more together. When the VIX is back around 20, you have a lot of single stock separation. But when volatility starts to crank up, a lot of stocks tend to move together. Right, correlations pick up. So I trade a lot more Qs and S&P and index. But yeah, I got beaten up. Like I started a couple positions today. Luckily I got out of some trades from yesterday cleanly. But I started a position in Square today, and that got smoked. Right, I added to it too. I started a position in FIVN, and here's where what I've tried to tell people when you have momentum pick up is stop trading options. And if you're going to trade options, take very small swings because that's where you can really inflict a lot of pain on yourself. So I say this all the time, and I know in our trading room, I still see some people continue to trade options like the market hasn't changed at all. You're going to have subpar results, right, if you don't pick the right direction and the right time with short-term options. So if you're going to play that game, I would, of still trading options, no matter what kind of market environment it is, I would expect a lot of volatility in your P&L, right? So just a heads up. If you're going to make some adjustments, trade less options, maybe a little bit more stock with a hard, not a hard stop, but with, defining your stops, you're going to fare a little bit better, in my opinion. All right, so I did get out of a couple names for losses today. Again, I'm showing you everything. I'm showing you everything I do. And then like I said, I got out of a couple things that are higher beta. Even though they're like my last portion of a trade, right? I've taken, took like 3 targets with apps. I took 3 targets with CRE. So the last portion of the trade, I had 1 target to go. But look at this thing, 119 yesterday, and I'm taking it off today at 105. So that's not good trade management, and that's on me. But yeah, if the bottom's going to fall out like this, then I got to be defensive. So as you're going through your holdings, I can tell you what I do. A break of the 50-day moving average, I'm out. Right? I'm out. I'm done with that name until it kind of, because I like to play in my mind the Dennis Hopper commercial from, like, I think it was like the 80s or the 90s. What happens below the 50-day moving average? Bad things, right? Bad things. So it's a great way to kind of reduce your risk. And sometimes, like, if you're like me and you are waiting for that signal, sometimes you are getting out of, and at least this is the last portion of the trade, but you're getting out at the wrong time. NEO is a good example. I kept NEO on thinking that, hey, this VPOC might actually see a bounce. It did, but very short-lived. And this name reports earnings next week, so I didn't want to hold it through earnings anyway. But so that's a couple of the things that, so that'll be my trade management. And yeah, so again, last thing I'll say here is, I don't think a situation like this is going to happen again, but if we break the 50-day moving average, then I don't have to even worry about if we start breaking much further. So that's my game plan. And, there are reasons why we could spill further, right? We know that there's no fear. There's been no fear in this market. Everybody, anytime there's a market dip, people are talking about having diamond hands and, like, this is rubbish. That's not how a disciplined trader and a profitable trader over time operates, right? Doing all that stuff all 100% on emotion, it's great when the market's going up, but when you start to get volatility, you're going to have a bad time. And that doesn't work out for anybody long term, to say things like that, and diamond hands versus paper hands. And buying the dip, and it's going to recover, and it's going to go to the moon. I'll tell you, a quick thing that I saw yesterday, and then we'll end this video, or 2 days ago. Where's this CCIV now? Right, this CCIV, when this thing dropped, right? People didn't put this in perspective either, that the stock ran up from $10 to $60. They were looking for more gains. After a name went up multiple hundreds of percent. So, when this thing dropped at 35, I saw people commenting about, well, why is it down? And, then I saw people in the comments section of a post that I made saying, it's going back to the moon, and, like, all kinds of nonsense like that. I mean, it's now down to $27. So when people come out and tell other people things like that to buy more and so on, and buy the dip and so on and so forth, you're really doing a disservice to other people by putting, like, fantasies in their mind about it'll be fine if you buy the dip, right? Because if you bought the dip when it was at $35 and it's now down to 27, you're in a bad spot. So, everybody gets caught in trades. It happens, but you have to react in an appropriate and in a I can't think of the right word, but in a mature way, right? Not with this, like, this for lack of a better term, this bullshit on Twitter, right? People are going to get really hurt if you're not trading with discipline. Okay, so again, I'm not trying to scare anybody, but I'm telling you what I'm going to do, and that won't hurt for me. Getting out at the 50-day moving average, I'll still be securing most of my profits. Now, I would have given back some, but you live to fight another day, just like in here. Because again, when this happened, right, we got really lucky that we bounced back like this. So I hope that we get lucky again and we stay above the 50-day moving average. All right, guys, thanks for watching. Have a great night, and I'll see you tomorrow.